Hello guys, jumping here real quick. I'm so excited to welcome you guys to my brand new YouTube channel. My name is Herman Cheplex from Houston, Texas. I'm actually originally from Cameroon, but today I'm going to spend time on my first YouTube video channel to educate you on how you can transform your credit score from the low 300s, the low 400s, to the 760 or to the legendary 800 club. Let's go! So guys, I'm very excited to start the YouTube channel. As most of you know already, a lot of my friends have been calling me, asking me, many people have advised me about this, and I said to myself, hey, why not? Why not take everyday people that are struggling with their lives, like I used to struggle, to guide them to be able to get the same amount of credit score that is enabling me to live the lifestyle that I have right now. For example, many people are wondering every day about their credit. They're worried about how to get a good credit, and more importantly, when I actually started my real estate business, I noticed that a lot of my customers, even though they were now making good money, they couldn't buy houses. A lot of the other people that I was working with, they were able to make good income, but their credit was not good enough. So what is credit? Credit, it's like everyday thing. It's very, very important. It's going to determine how much interest rate you're going to pay. It's also going to determine a lot of things in your life, what you can afford based on your credit, because there are two things in life. The banks are going to look at your ability to pay and your willingness to pay. And how they're going to look at your willingness to pay is going to be based on your credit file, your credit history is extremely important. So if you have bad credit, don't worry about it. I'm going to take you through step by step, very unique ways of how to transform you, the little things that you can start doing to your life today, to be able to get your credit to a very good score that will enable you to be able to live the lifestyle that you want. So credit is like a school, right? You go to school, you get judged by many different factors. You get judged by if you come to school early, you get judged by attendance, you get judged by your homework, you get judged by exams, quizzes, and stuff like that. It's the same with credit. With credit, you're gonna get judged by 5 very important things. First, you're gonna get judged by the most important one is the total of on-time payments that you make. Say for example, if you have many accounts, how many on-time payments you make is going to be important in judging your credit. Another very important thing that they're going to judge you on is your utilization rate. I'm going to talk about this stuff in detail, but right now I'm just going to tell you guys the basics of it. So they're going to judge you by the first thing will be your total online payments. Number 2, they're going to judge you by your utilization rate. Number 3, they're going to judge you by the total number of accounts that you have open. They're going to judge you by the length of accounts that you open. And the last and least important, they're going to judge you by the number of hard inquiries that you have. We're going to talk about hard inquiries. We're going to talk about soft inquiries. And we're going to talk about credit utilization rate. We're going to talk about on-time payments. And more importantly, we're going to talk about utilization. The most important things that I focus on, that I want you listening, you Derek, you Kevin, you Lauren, the most important things that I want each and every one of you to be focused on is your utilization rate and the total online payments, because those account for about 70% of your credit score. So 70%, that's very important, right? So online payments, say for example you have one credit card and you make 50 payments and you have 49 payments on time. That's very important. If you have a total of 2 credit cards and you have 100 payments and you miss 1 payment, it's not as bad as if you have 50 payments and you miss 1 payment. So you always want to be able to keep your total on-time payments as possible. Always make your payments on time. And it doesn't actually mean you have to make all the payments. All it means is that you make the minimum payment, which in most cases is about $25, $30, $40 a month. You make that minimum payment a month, every month on all your accounts. Make sure you make your total payments, you make at least the minimum payment every month. And that will gonna help you out. Have a few accounts as well. That way you make all your payments on time. If you have 10 accounts like me, for example, I have 10 accounts. So actually I have 14 accounts total. I use about 10 of them, I have 14. I make sure I make all my payments on time. And that worst case scenario, I make at least the minimum payment to get that going. So another very important thing that's coming in is your utilization rate. Utilization rate accounts for about 30 to 40% of your credit score. Being able to keep your utilization rate below 15% on the worst scenario, 20% is extremely important. You want to keep your utilization rate to a maximum of 15%. I recommend you keep it between 10 to 15%. So utilization rate works this way. Say for example, you have $500 in credit. If you use $500 and you owe $500, your utilization is 100%. So you're not any different from somebody who has 100,000 is using 100,000. So here's what I recommend that you do with your utilization rate. The best thing to do with your utilization rate, keep it under 20%. So whatever you have, make sure you don't spend more than 20%. That really helps you. I know a lot of my friends, they're actually very rich, very successful. They have credit cards about 100,000. They max 80,000 or they have 50,000 and they max 25, 30,000. Their utilization is over 50% and their credit score are like in the 700, 600 range. Why? Because their utilization is very, very high. So you definitely want to keep your utilization under 20%. And another way you can actually do that is by actually getting more accounts. Say for example, you have 10 accounts but you owe 20,000, but your available credit is 100,000. So in that case, you now have a utilization of about 20%. Same thing if you have 10,000 and you're only using 2,000. So go ahead and ask for more credit, ask for more lines, open more credit lines. That way you can keep your utilization much lower. The greatest thing I always do is when I don't need credit, I call my banks, I ask for credit line increase all the time. And the reason why is to constantly keep my utilization to below that 10 to 20%. So you go back again, I have more lines, I open more accounts, I open more so I don't need them. And you see, it's funny about banks is, banks actually love to loan you money when you don't need it. When I wanted to buy my new car recently, I take my money from my savings accounts, from my different banks, I put them in all one bank account. I went to the bank and I told the bank, hey, you know what? I want to borrow money to buy a new car. They looked at my account and said, well, why you want to borrow money from us? You have the money to buy it cash. I said, yes, I do. They gave me that and I got approved and I paid 1.9%. And that's where you want to be. Because by you actually showing the bank that you're responsible, that you don't really need this money, it does help you to be able to get a much lower interest rate because you're not a bigger risk factor. Another very important thing that I want to talk about is being able to get keep your number of inquiries very little. I see sometimes some of my friends, they say, oh, they jump in there, they want to run around and just apply for credit just to see, or because you see a couple of stuff in the mail, they tell you they're going to give you some points and you apply. So unless you really need credit, you don't need to apply, because when the bank sees you and you start rushing and you apply for 3 credit cards, you apply for a home loan, you apply for a loan for furniture, it shows some desperation and that's going to drop your credit score much lower. So my advice to you is never ever have as many inquiries, no more than 3 to 5 inquiries a year. Because inquiries, they do take about 12 months to impact your credit, and it stays on your credit report for about 24 months. So what you want to actually do is, whenever you need credit, say for example, if you wanted to buy something major next year, apply for 1 credit right now. That's going to enable your income to debt ratio to be much lower. Your available credit is going to be much higher. So when you go to buy furniture, and the furniture is going to give you 0% if you buy over there, when you apply with them, they can actually see that you don't really need that credit. They're going to give you the credit, and more importantly, the terms that they're going to give you are going to be much lower terms. So I strongly recommend that you go ahead and go ahead. 3 things to do. The first most important thing that I want you to do today is there are 2 major important websites. Credit Karma is one of my favorite ones. I use that a lot. I check my credit on average every 60 days, usually sometimes if there's a lot of stuff going on in the world, I check every 30 days, but I encourage you to do it a minimum of at least every 60 days. You can check through Credit Karma, you can check through Credit Sesame. Those are free sites. They give you a gauge of your credit. They don't actually tell you what your exact credit score is going to be, because one thing that I've learned with credit is over time is based on who's pulling your credit, it's going to determine what your credit score is going to be. Say for example, if the bank is pulling your credit for mortgage, you have a totally different credit score from when a dealership is pulling your credit to buy a car, because you have a different payment history of the car history, and you have a different kind of history, a credit for a loan, for mortgage history. Because the same thing happens when you want to go ahead and say, oh, wait a minute, my credit score was this, how come when they pulled the credit was this? And the reason why is because based on the different lenders that are pulling your credit, you have a different score for everything. You You have a different score for insurance. You have a different score when you buy a house. You have a different score when you buy a car. It's the same thing as a different credit bureau, because all three credit bureau, Experian, TransUnion, and all these credit agencies, they use different models to scale you as a person for your credit score. So being able to say it's not an exact factor, it's just a gauge of what you are. So but if you follow all those things together, you do. Another way that I've learned that some people recommend, which I actually do not recommend it because I don't think it actually works, is to get somebody who already has an established credit line to be added onto your credit so that you can pick on that credit history. And that really works when you have a child. Say for example, you have a daughter, you have a son, and they're about to turn 18 and they have no credit, and you want to give them some form of credit establishment. What you're going to do is you can add them on your credit, credit piggybacking. But I don't really recommend that. I recommend that when you actually become of maturity age, say 18, and you want to start building your credit, you can now actually go ahead, get started, go to the bank, get your small credit card. When I started credit, my first credit was with Capital One. My first credit card was $300. I spent on it, I paid on it, I applied for a second credit card, I applied for a third credit card, I applied for a fourth credit card, and now I have a variety of different credits. And that really helps me out a lot because I do have, I have a car finance, I actually have multiple cars finance, I have multiple credit cards, they have some limits on them. Most of the time I try to keep them to a 0% limit. Every now and then I paid everything enough, so my utilization rate is almost zero. I have furniture delivery, I have them on credit 2-3 months, I have year pay, I paid it off. So I have all those different variety of credit. That way it shows a different portfolio of credit. I can even finance a house just to have a mortgage payment history on my credit. So I strongly recommend that you do all those things to get back again. Again, if you want any channels, please subscribe to my YouTube channel. I really encourage you to like this video. It's not the best video. I don't expect it to be the best video. I'm going to actually create a lot more professional videos where we're going to talk about different topics, real estate investment strategies, how to buy a house, how to save money on closing costs, some of the things you can do to save money on your interest rates, and all those important things. So I strongly recommend that you like this video, you share this video with your friends, subscribe to my YouTube channel. So together we're going to change the world together. So to go back again, this is the first video. I just wanted to get started because one thing I've learned in life, if you don't get started, you have a problem, right? Every time I've been procrastinating, I have a video guy, I need to have a video, I need to have a more professional ways of getting this done, and I never got to do it. And today I decided that I'm not gonna wait for the professional video guy, I'm not gonna wait for anybody, and I want you not to wait for anybody. I want you to get started today. I want you to get a piece of paper and write these few things down, that you're gonna focus on your on-time payments, you're gonna focus on your credit utilization, you're also going to focus on the total number of inquiries that you have. You're going to focus on keeping the length history of your account. You see, being able to have a longer history of accounts, like I've had a 10-year history of multiple accounts, that has really helped me. So I strongly encourage that don't close all accounts. Don't go ahead and close all accounts right now, because when you close accounts, that affects your length of history. If you open new accounts, that also affects your length of history. So being able to keep long accounts, even if you're not using them, is extremely important to your success. Again, I want to thank you guys for watching. I want to thank everybody for actually encouraging me to just go ahead and do it. Here in Miami, I'm going to be working on a project here in Miami. I'm also going to be previewing some few places here. I work for Keller Williams in Houston, Texas. I'm going to go to Keller Williams here in Miami. I'm going to visit with a few people. If you have any questions, call me, text me, email me. You all have my information. It's public. I do have an Instagram page, Herman Cheplex on Facebook. I'm going to be going live on Facebook to talk about a few other things. More importantly, you can check me out on Instagram at Cheplex13. Thank you guys for subscribing to my YouTube channel. We officially have the best video. Let's go. I'm going to redo the video again. I'm going to have it more professional. I'm going to have slideshows on it. I'm going to have more question and answer session. And we're going to get live to discuss all the important things that affect you as a person. And if you have any questions, I'm a strong believer that together is how we're going to move forward. So if you have any questions, call me, text me, email me. If you have any other topics you want me to talk about, or you have any ways of how I can improve my videos, let me know in the comment section so we can get started. Let's go. Thank you. We're live.